Good morning, everyone. Once again, we meet at the beginning of this week. Today it's 16th of September. Nour, we have a lot of good news and beautiful levels that we hit after this week, after last week.
Earlier
So
this week.
the first thing actually that came into mind is definitely dollar yen.
Yeah, finally.
And that's definitely because the dollar is getting weaker again, and there is the expectation of the Japanese central bank to interfere one more time. This is the same thing that we mentioned last week. Can
Mhm.
we discuss just the levels where we can continue from at these levels? Like for me, okay, we are testing the 14-month low. That's amazing. We broke the 142.7. This is already discussed, but what about the next support, the support line? Where should we look at dollar yen and say, okay, now we should be careful, or maybe this is the first target at least?
I mean, at least for the time being, but if you look at basically the chart, first of all, this is the lowest level, another new level, basically not seen since July of basically 2023. And the next level would be basically at the beginning, or at least if you look at the chart, it's 139, which is just a psychological support. And then the next one, you will have to look for somewhere between 138.50 and 137.80. That would be a level that most likely I would say it might actually hold, especially that the technical indicators also on the daily chart. Now we're seeing some sort of like we're getting into almost an heavily oversold territory. Not to mention, also not to forget that today Japan and China are actually banks are closed for a holiday. So, but I think once again, this is one move that we've been waiting for a long time now, and it is basically happening. So, if you've been short for a long time, it might not be a bad idea to start taking some of your profits.
Okay, so it's good. Let's start enjoying some of the profits from here.
Yeah.
So we've noticed as well that dollar index is at 100.7 almost again, and
Yeah.
we are near the triple bottom, 100.5. Are we gonna see the dollar index breaking that bottom again? Like we know that the third test usually is like the
Mhm.
biggest test that usually can happen, and a break below that is gonna change the face of a lot of currencies. We're starting new trends in a lot of currencies, and we've been waiting. Definitely, this is all
Yep.
related to the Fed, and if they will cut the rate between 25 basis point to 50 basis point. Now, the
True.
rates that I checked yesterday were like 50-50.
Yeah.
You were updating us regarding other rates a few minutes ago. Can you give us a better idea of what should we expect after 100.5 and what's the
At
current
least.
percentage?
I mean, currently, the Fed funds futures basically, we closed the week last week, at least around like 50-50, as just said. But and then today, if you look at the Fed funds futures for the month or for the September's meeting, now we're at 65% possibility or probability for a 50 basis point rate cut, which explains what we are seeing today when it comes to the US dollar index. Now, at the same time, I'd like to use time and price. So the last move lower in the US dollar, it took about 13 days. So usually you don't need if the upside that we saw like 2 weeks ago, exactly 2 weeks ago, if the upside retracement is just a retracement, it should not exceed more than 13 days. And today is day number 13, which basically the move lower basically continues to give you, or at least give us a little bit more clues or more confirmation that the upside that we saw from 2 weeks ago was just another correction before the downside trend resumes. Now, breaking of the 100 spot 60, 100 spot 50, it's not going to be going to be easy because we've seen this like for a long time, and a break below that that would basically open the way much lower. I would say at least we would be looking for towards 100, and that basically will have an effect on everything, not just currencies in general, but you have to consider that breaking below that, it will affect gold, it will affect silver, it will affect the rest of
The stock market, of
the rest
course,
of commodities.
and the stock market as well.
Of course,
So
definitely.
Usually what we've seen from the Fed before is we usually go up. The markets will go up if the expectation is to go down. They push the market a little bit up, and then after that, once the news come out, you will see like come back to the same levels. Now we're seeing a different story, and this is a little bit scary. So just try, guys, or the investors, the traders, try to be careful at these levels. Don't be overexposed on the market. Now, the second most important thing that I've noticed today is finally, at the beginning of this week, we have silver breaking above 30. And I think we're heading around like towards 31.7 or something around that. Finally, after a long time that we've waited for that. And gold is broke as well last week. We broke the consolidation and the sideway move that we were trading. We mentioned that at the beginning of the week, 2,530 was the resistance. We broke that. Now we've made a new high around 2,590 or 89. So what do we expect from those two? Silver is a little bit more clear now, at least. Now we can see that the level in front of us, 31.7, but gold is a bit blurry. So what do we expect now?
I mean, at least that there were, I mean, gold basically broke out of the range that we've been trading within for the past month almost. As you said, 2,500, 2,530. It was stuck below record high, but at the same time was supported by 2,575. 475 without a clear break. Yes, last week this breakout is basically opening the door for, or opening the way for, or paving the way for another leg higher, which basically we saw earlier also at the end of last week, earlier this week. It is still, I think, the 2,580 and between 2,600. It is going to be a strong support. That would be basically 161%. Move of the previous retracement that gold experienced. At the same time, I don't see it's basically tradable at these levels. I don't want to be a buyer, but at these levels, if I'm not buying, a few months back, I wouldn't be very interested to buy. But I'll be more than interested to see how silver will react here after the breakout also of last week, especially that gold silver ratio is now showing that silver is more likely to outperform gold going forward after the recent move. So I wouldn't be surprised if actually silver stabilizes much better, or stabilizes above the 31. Even we could basically, the next resistance will be 132 and even 133. That would be possible. For gold, I think there will be a lot of sellers around the areas that we're seeing now, 2,580, 2,600 as a profit takers. Plus, there might be some sort of a long-term odds, or long-term investors who would like to keep gold a little bit below 2,600. That is also a possibility. But in general, you cannot basically change your outlook on gold saying, okay, this is the top, as long as there is no indicators, unless if there is no clear break of the trend, there's no reason for you to start picking up the top.
Now let's keep in mind two things as well. Goldman Sachs target was 2,600 that he put for gold, and at the top of that, we still did not see the rate cuts. So all this move, and there's no rate cut yet. So usually at the rate cut, we're gonna see another hike, supposedly, if the market gets what he wants.
Yeah, don't forget, the market might be already pricing in what's going to happen next.
Of course,
they might not basically, wait
small
for
kick. You know what I mean? Like when you get the news, there is a small kick, or at least a wick or a tail, and the candle that will show you some extra few cents. Now, there's two things that we need to mention before we end this. I wanted to talk about euro dollar. Euro dollar trend, okay, it's up. We can see we're trading around 1.11. Do we still have the same resistance, 112? And especially after the rate cut that happened in the ECB.
Yeah.
So
That is very interesting because we had a position with everybody last week when we had the live coverage of the ECB. And what we mentioned is basically the most important thing is we need to understand if the ECB is committed to further rate cuts or they will refrain from mentioning anything about it, which basically what they've done. They decreased the outlook for when it comes to GDP, but they increased the outlook for inflation and said we're not going to be basically cutting or we're not committed to a timeline for the next cuts. That's why the euro is basically up, and I think the next one to keep an eye on is 112. I wouldn't be surprised.
This is not the first time they mentioned this.
Oh yeah, definitely, but this is after the recent data, which is the most important thing because the recent data showed that inflation is very sticky there. So as long as the ECB is not mentioning any forward guidance when they are going to cut rates again, because the next meeting's odds was above basically 100%, which the market was expecting another rate cut in the next meeting. Now it's less than 40%, which means markets are not expecting rate cuts, and this is one of the reasons why the euro is basically getting more support, aside from, of course, the dollar weakness.
Okay,
so
Nour.
112 is still the number to keep an eye on next.
Okay, that's still our resistance at the moment. So just to end this, we have two things to notice in the US indices. We have Dow Jones and S&P. Both of them toppish at the top near the all-time high, but the Nasdaq is performing much lower, especially in the past couple of weeks, despite the fact that the Nasdaq tried to rally and push a little bit higher. Is this all because of Nvidia? Is this all because of the technology or the AI related investments?
Just because we have about like 10 seconds, maybe. It is still part of the rotation, I would say, but especially after the recent rally that we saw also in tech this year, last year, and for the past few months. And we had some positive remarks from Nvidia about the challenges that they've been facing when it comes to manufacturing the new chips. However, I would still say the retracement of the equities is still alive. I would say after maybe the Federal Reserve would it depend on what the Federal Reserve is going to do, but I would not be a buyer at record high, either NASDAQ, S&P, or Dow Jones. I will be more likely to wait in order to see at least a dip before I would even thinking about joining back again.
Perfect. Thank you, Nour, and thank you all for attending. We'll see you next Monday.